For those of you who've missed out on the last Brisbane boom, this may be the video for you. In this episode, we'll do a deep dive on the Brisbane property market. We'll cover the best suburbs that have grown in rent, the best suburbs that have grown in house prices, and also at the end of the video, I'll be giving you on a map, sharing with you the areas that I would really steer clear of, suburb by suburb, and the areas that I think are right at the bottom of the next growth cycle in Brisbane in 2023 going into 2024, the exact suburbs. So stick around right to the end. My name's PK and I help people build passive income through the Property Investment Accelerator using data without needing a $15,000 buyer's agent every single time. In this channel, we talk about property, the economy, and financial happiness. Hit the subscribe button, give it a thumbs up, let's go. So more than just scene setting, like this is critical information that you need to know. I'm going to share with you 4 charts before I get into like the meat and bones on the Brisbane property market. Here's the first one. What this is showing, and it's kind of pixelated, sorry about that all the advanced comparable property markets to Australia, including Australia, are actually going up. So this is like, some people still think, oh, we're in the middle of a recession or interest rates are going up. Like I had someone message me this morning saying, when's the property market going to start going up? Like, dude, it's already going up. Not just Australia, as you can see in this blue line, but also New Zealand. Okay, so you'd be like, hang on a second, didn't New Zealand just like take care and do away with negative gearing? Didn't they have massive tax changes? Didn't the government really stamp out investors? Isn't everyone migrating from New Zealand to Australia, including Perth? Well, that's all true, but check it out. We've started to see an increase in house prices in New Zealand, even in the UK, like where the economy's just totally shot. Unemployment's going up. Inflation is much more of a problem there than it is here. Even in England, house prices going up. Canada, I'll do a whole deep dive on how our economy is very similar to Canada's and house prices often follow suit. But the US as well, I mean, the center of where all of this inflation problem is stemming from, the epicenter of the economy globally, inflation going up, all this stuff. House prices, funnily enough, are actually consistently going up in 2023. So that's just really quick. 2023, almost everywhere, house prices are going up. Keep that in mind when we get to Brisbane. And just quickly, in the next 1 or 2 minutes, I'm going to show you the affordability that Brisbane affords. Okay, so I saw this in Sydney. This is recently sold, my dream home, not. 27th of May 2023. This thing sold for $4.5 million. There's nothing special, just happens to be in a great place. Brisbane, you won't find crappy houses like this selling for almost $5 million. That's number one. Number two is that the yield in property in Brisbane is still pretty high. So portion of suburbs with positive/negative cash flow in capital cities. So you see, with positive cash flow, this third column right here, there's none in Sydney, all right? There's none in Melbourne. So for those of you who are starting their investing journey and you're like, okay, I want to buy multiple properties. I need good cash flow, even if I'm on a high income, because I want to increase my borrowing or at least not penalize it every property. Guys, just like look beyond Sydney, Melbourne. I know you're probably watching from Sydney and Melbourne because that's where most of you guys live. But you have to look beyond Sydney, Melbourne. There's no positive cash flow properties. There's no high yield properties there. But in Brisbane, there are. 5.7% of all properties analysed, this is by CoreLogic, were high yield, high cash flow properties. In Adelaide, it's a little bit less. And that doesn't make sense to me. Like, I think Brisbane should be less because it's a more burgeoning economy. It's a bigger market. But there's the arbitrage. There's the opportunity that lies. Perth, we all know how much I'm bullish on Perth. Done a million videos on that. 22% of properties are positive cash. And of course, that gets sucked up by owner occupiers, by investors, and the yield comes down. Less positive cash flow properties or suburbs then exist, and that's how the equilibrium is realized again. But that's only realized after massive price growth. You can see Darwin, we don't invest there. I've done many videos on that. But Perth is good. Darwin, not so good, even though it's got a high amount of positive cash flow suburbs. Hobart's 4.3%, not too bad, but I'll do another video on that. And you can see Canberra even less so. So there's still opportunity to buy in Brisbane. Get in while you can, right? In 10 years time, I don't know if there's going to be this many high cash flow suburbs. And then lastly, just before we go on a map journey through Brisbane, let's go through the stamp duty payable at median dwelling value. What I love about this, and I think new investors, maybe even experienced investors, don't fully realize this, is that actually in Brisbane, stamp duty is really low, okay? So even, check this out, that median house value in Brisbane, 762, is bigger than what it is in Hobart. But in Hobart, you're paying this much stamp duty, 27,000, whereas in Brisbane, you're only paying 20,000. So compared to all over states and territories in Australia, Queensland, i.e. Brisbane, has the lowest stamp duty. So if you're trying to get onto the property market, just your first property to invest in, then chances are Queensland's where you want to be looking, because check this out. Even if you compare it to Adelaide, you're paying another $10,000 in stamp duty on a property that's actually cheaper. So that doesn't make any sense. Here's the value in Brisbane. Okay, let's go through median value, absolute level. Let's go to 3-month change. Let's go through 12-month change, and then also change in rentals. And I'll conclude it sharing with you some of the best and worst areas. But clearly right here, you can see this is core logic, mapping the market free. Anyone can use this. The darker the shade of purple, the more expensive. So you can see Brisbane right here, and the areas closer to the city, especially here on the right-hand side, they're the most expensive areas around Bulimba, etc. Let's just go through this a little bit, right? And of course, I know I'm covering more than just Brisbane City Council. We'll go out to Logan, we'll go to Ipswich, we'll go up north to the Moreton Bay City Council area. But clearly, these inner city suburbs are always more expensive. No real, no real surprise about that. What I like to see is the ripple effect, where you're seeing one shade go dramatically from dark to really light. Okay, it's not just gradually going down, but it's going from like this shade to like this shade, or this shade above 2 million to like just above 1 million. The reason I like that is because that's where the ripple effect might illustrate opportunity for us investors. For example, this area right here, just south of Nunda, as in Hendra, okay, is obviously a really good area, okay? Hendra is really nice as it goes into Ascot over here, Clayfield over here, Wooloowin over here. But then Nunda, it becomes like dramatically cheaper. You notice how it doesn't like go from this shade to this shade. It just goes like straight light. And there is the opportunity for investors. That means that in the long run, not like in the short term, not like in the next year, but in the long run, Nunda has to catch up, at least some extent, to the Ascots, the Hendras of this world. Now, Nunda, of course, is an area littered with units, lots of unit high rises, and it has its own issues. There's a local shopping center close by has just gone out because of the floods, etc. But nonetheless, this is how you should be reading a map like this. Let's try find some other areas that are not too dissimilar. Here's one, a really nice area, Grange, and then just north of it you've got Stafford, and then you've got Stafford Heights, which are really nice, low density residential areas, but showing a lot of value right now, especially because they're flanked both on the south and on the east side, like with Kedron, with much more expensive suburbs. Now, this doesn't automatically hold true. You can't make an investment decision just based on the ripple effect alone. For example, Caboolture right here, a little bit cheaper than Ilimba up north. So you might be like, oh, this is like Caboolture is closer to the city, right? And it's cheaper. So like that must be an investment opportunity. We have to be careful around the land supply that's also available in some of these areas. And Caboolture, for example, has a lot of builds have happened and a lot of builds to happen. And so that may be something constraining house prices. Another area of interest to me is on the south side, Mount Gravatt East. Okay, you see this, and this is like a nice area, nice residential owner occupied type area. It's flanked on all sides almost by more expensive suburbs. Okay, so on the south side you have places like Rochdale, which has just gone up so much. I think Rochdale's out of control, to be honest. I don't think there's any value there left at the moment. You got 8 Mile Plains, which is more expensive. Then on the north side you've got other areas like Belmont, etc., that are more expensive. So there's a lot of opportunity over the long term. Of course, just because I do this video doesn't mean these guys are going to go up, but over the long term there has to be some equilibrium sought out. And everyone always talks about Red Bank. Like, I don't know why why it is, but everyone's like, oh, Red Bank's super affordable, right? Like, I need to buy a house and land package, or I need to buy an established house in Red Bank, which is more to not quite Ipswich, but more towards Ipswich than Brisbane City Council. It is cheap, and yes, it is a little bit less expensive than Balbowie, which is just north of it. But you have to understand also there might be reasons why it's less expensive, like a floodplain. I think in the Moreton Bay area, like you've got Callinga, you've got Petrie, you've got Bray Park, you've got Strathpine, which are giving a lot of long-term value potential right now. They're not around any areas with lots of land, available developable land supply in the pipeline. They are slightly cheaper than some of the areas at least around them, like Marumba Downs. And there's really good utility, train lines, job centers around that area. And you're still like kind of close to Brisbane City Council, not quite in Brisbane City Council, but close to it anyway. Of course, these have had a great run up and they're not positive cash flow areas, but they're one of the higher yielding areas that you'll get, especially compared to Sydney and Melbourne. I think if I had 500, 600, 700, 800K to spend, I would be putting it in this area amongst others, as opposed to any 2%, 3% yielding area in Sydney. Some free tips for you. And of course, Redcliffe, similar sort of story. You know, a lot of like buyers agents try to get you on the Redcliffe bandwagon by saying, oh, look, it's only 20, 30 kilometers north of the CBD. If that was in Sydney, it would be worth $2 or $3 million on the beach. Redcliffe's still got a bit of a stigma. It's not quite there yet, but I do think that if you have a long-term hold horizon, 10 to 20, 30 years, Redcliffe is going to, and of course areas around it are going to have really a lot of upside. And of course, you know, there are better areas to buy, objectively speaking, but in the Brisbane context, I think it's not too bad. And if we go on the south side, I know I've been kind of anti a lot of parts of Logan previously, but some areas like that I have been pro, like Daisy Hill, kind of like east of the highway, I should say. Daisy Hill, Shayla Park, these are actually nicer areas. They're not like Bergens or anything like that live there. They're kind of more sophisticated, for want of a better word, have done really, really well, as have areas further south within the sort of broader Logan City Council, like Crestmead. Now, let's just analyze Logan for a second. If I just see this on a map, I see a lot of dark here. I see some light here. Let's get to that in a second. A lot of dark around here and a lot of dark around here, and dark further south, you know, more towards kind of between Gold Coast and Brisbane. But there's still a lot of light around here, and this is the heartland that I did many videos on, kind of suggesting you have to be very careful. Logan City Council Shire. Okay, now what I'm seeing in Logan is not gentrification by any stretch of the imagination, but the underlying data is improving a lot. It's improving a lot in areas like, not Kingston necessarily, but areas like Waterford West. Now, and Crestmead, I know that clients were buying there 2 or 3 years ago in a big way. These areas are a little bit nicer, like Waterford West, Bethania. These are a bit nicer than your Logan Lees, a little bit nicer than your Logan Centrals, a little bit nicer than your Kingstons, than your Marsdens, okay? And what you're seeing here, unlike when I used to be anti a lot of these areas 2 or 3 or 4 or 5 years ago, is that a lot of that developable land supply has been soaked up, okay? So you can't say that a suburb or city council is bad forever. Every suburb in Australia at some point will have the most tremendous boom, and this is not necessarily the time for parts of Logan that I've just gone through, like Waterford West, but I think there are much worse areas in Brisbane than to be investing than these areas right now. Would I have invested there 5 years ago? No, but the land supply story is completely changed. Do I regret not buying in a place like Woodridge in the center of Logan, which has gone up a lot, almost 50%, whilst being above a 4.5-5% yield? No, I don't regret it. And the reason is that some of these areas have such shoddy tenants, okay? Of course, that's a generalization, but the majority of properties in a place like Woodridge, like more than 70%, are renters. So as soon as this rental market abates, the rental crisis goes away, a lot of landlords will be forced to sell because they just can't get a tenant, or the rent price comes down and the tenant trashes the place. You just don't want that headache as a property investor who isn't speculating, but rather holding for the next 10, 15, 20, 25 years. So I have no regrets in missing out on 50% growth in a place like Woodridge over the last few years, because, hey, hey, we all made more than 50% anyway, but with more stable tenants, but with lower renter proportion in terms of that suburb, and with a better gentrification story going on. But right now, I think some parts of Logan are much better to invest than I used to think. Ipswich, however, for me is a completely different story. You can see that there's no flanking of areas that are more expensive compared to that Logan area. There's no, scarcity of land. In Logan, we were flanked on all sides. As a reminder, let's just go through that again right here. We were flanked on all sides by basically more expensive areas. And that's a really good thing, all the way, of course, down to the Gold Coast, where it just gets super expensive. In Ipswich, around this area, you don't have that phenomenon, and you have oodles of land all around here. Have you had a buyer's agent try to flog you a property, house and land package in one of these Ipswich areas, or Red Bank, or my favorite, Ripley? Like, come on guys, you got to be careful. There's not only flooding, not only like really shoddy soil that degrades the foundation and causes cracks over the long term in the structure of the dwelling, but also you've got so much land and around here that it just doesn't make sense to buy. I know, like, I'm not stupid. I know that a lot of these areas have gone up in the last 3 years, but tell me an area that hasn't gone up, and that's because of national factors rather than local factors. So any buyer's agents that's high-fiving you because they made you money in Ipswich over the last 3 years, well, they underperformed the average anyway. You have to see how you're performing against the average, not just absolute. So Ipswich for me is still a big no-no. Now, Brisbane property market is actually going up. This is the 3-month value change. So you can see everything is purple. In other words, it's actually going up. There's a few spots that aren't, like more in the center of town, but I think that's really caused by units, because a lot of unit dwelling types in these areas, and a bit of Ipswich and around here is not doing too well. But as per the data right now, Sydney is well and truly started its growth cycle, but we're not investing there. Perth is in the middle of its growth cycle. Adelaide is just about to finish its growth cycle. But Brisbane, I wouldn't go diving deep just yet. We need to see if this growth cycle is sustainable. But I did share you affordability statistics earlier on. So even if RBA interest rates go up another once, twice, 3 times, 4 times, Brisbane has got a better chance of holding its own than Sydney, which could see another dip potentially if interest rates go up that much. Brisbane is a much safer bet than Sydney and Melbourne, and it's right at the cusp of its next growth cycle. So really exciting times. 12 months change, you see everything red. And this is what I mean. And this is not just my opinion. This is based on data. I've done a cycle video a couple of months ago. But here you see everything in red. But right now, in the last 3 months, you see that start to change. And you might say, oh, look, this is a dead cat bounce. It can go red again. But that's not really how property markets work. Property markets are like ships. Okay, imagine the Titanic. It couldn't just quickly evade the iceberg. I'm pretty sure the captain or whoever saw the iceberg maybe 100 meters away, or a long way away, but it takes time to change the ship. The property markets are like that. They're not stock markets. They don't go up 1 month, down 1 month, up 1 quarter, down the next quarter, up 6 months, down 6 months. It goes for yearly cycles. Okay, so Brisbane I think is right on the cusp, but just be very careful. We just want to monitor it a little bit longer to actually see if our thresholds really sink in, if the data momentum really gathers steam. We want to be buying, of course, at the bottom of the market in this cycle, but there's no points for getting it to the exact month only to realize that actually it's just plateauing anyway. So just hold your horses. But let's flick to the rental story. Now what you're seeing in front of you is house rents. The darker the shade, the more expensive. This is a really good barometer or proxy for where good areas are in terms of socioeconomic status versus not. So if you're the sort of property investor that really just wants to buy in rich areas, this will be interesting for you, but it will be more interesting for you if you realize that actually the value of investing is to buy something that's about to become rich, or richer, I should say. So what we're trying to find here are areas that are really light shade, okay? So the rents, not that much. Of course, compared to house prices, it could be huge. The yield could be huge, but rents aren't that much. But alongside that area or that suburb, rents are high. Therefore, there's an opportunity for increasing rent over there. So you've got areas like this right beside Daisy Hill, like Slack Blacks Creek. This is a really good example of an area where around it, a really good gentrification, really, solid incomes, but right next to it, like on this side of the highway, not so much, but it's getting there, and this kind of dark purple will creep down at some point. It's already there in Meadowbrook anyway, so it's kind of flanked both on the north, the east, and the south. And on the north side, you've got it around Bracken Ridge. Okay, Bracken Ridge has gone up so much. All around it, rents are much higher. Bracken Ridge doesn't have that many apartments either, and you've got a lot of opportunity for rents to potentially rise as people get priced out of more expensive areas closer to the city, and they need to go to Bracken Ridge, but they have good incomes. They just can't quite afford those higher house prices. Let's look at 12 months change now, and of course that is really solid as well, with a lot of areas growing by more than 20% rent. So overall, I think Brisbane has a lot of potential. It's kind of at the cusp of its next growth cycle, which is really interesting. Normally, city house cycles go on average for 2 to 4 years, and so let's say interest rates top out at the end of this year, or maybe let's be pessimistic and say in the middle of 2024. I think that still bodes well for this to be a 2 to 4 year cycle. I do not think it will be as significant as the last cycle. Brisbane basically grew by about 40 to 50% in like 6 to 12 months. I don't think that's going to happen, but I think over the next 2 to 4 years potentially, if that cycle plays out in that duration, house prices could go up another 30 to 40%, which is quite strong. And I think there's more upside for Brisbane over the next 10 years than there is for Sydney and Melbourne. Not just because of the Olympic Games, where the infrastructure, yes, some news going in, but a lot of it's already there. I think people blow that out of proportion, but just because of sentiment, affordability, a lot of migration to Brisbane is still happening despite COVID lockdowns being well and truly over, but also the contagion effect. Enough people think the Olympic Games is important, then it actually becomes a self-fulfilling prophecy and house prices grow up. So I think Brisbane has potential galore, maybe even as much as Perth, although I'm still more bullish on Perth. But of course, as you know, Sydney, Melbourne are at the bottom of my list of where to invest in. Brisbane, Adelaide, and Perth are at the top and have been for the last 3 years. Remember, you got to be in the game to win it. Hit the subscribe button, give it a like, and to level up and really make the most of this opportunity, I'll leave links below to my Facebook group with more than 35,000 amazing community members, Australian Property Mastery with PK, and also my podcast on Google, iTunes, and Spotify, Australian Property Mastery with PK. Use it, invest, make money. You don't have to thank me, but hopefully I'm adding some value along the way. My name's PK. See you guys.